is this sell-off fear or consolidation, or is there something more to it?
This is a risk-off day. I think it's a recession risk-off day. So I think the follow-up trade from yesterday's Fed announcement and other banks' rates announcements have been we have materially increased the chance of a recession in that environment. Beginning of that environment, you don't want to be in risky assets. Even some of the bellwether, best established tech companies, investors don't want to have them, and so those stocks will continue to underperform. It's rare you see Apple, Microsoft, Amazon, Google all underperform the market, but that's what you're going to see for the near term at least.
Okay, so some would say, I mean, if you're contrarian, if you look at the falls in the tech, some of these tech stocks, some would say maybe this is a good time to start buying.
Well, you need to decide whether you're a trader or an investor. If you're an investor, here's your chance to buy Amazon, Microsoft, Apple, Google, and a few other really high-quality names at a discount, at a dramatic discount. They're on sale. I'll just stick with Amazon. Amazon is trading about 40% below its average forward multiple. Is it at a trough multiple? It's actually traded a little bit less than this on a forward cash flow basis during the 07, 08, 09 recession. The great housing crisis, great financial crisis. But other than that, we're at a dramatic discount to its average value. And if you're willing to look out, 12 months plus, I think it's a great entry point. My guess is, and my fear is, you can probably get it slightly lower. And now you have to wait for estimates to likely get cut if we really are going to go into recession. So that's the noise you're dealing with. I think the next 10% move could be up, could be down. I think the next 50% move is much more likely to be up than down. So if you're a long-term investor, yes, I agree. This is a great opportunity to buy these assets.
Yeah, and that's the real question, though, because you've got to have that capital and ability to deploy that capital and play the waiting game. And that is the problem for at least some of these investors that are dealing with the situation when it comes to the macroeconomic environment. So I suppose if you were thinking selectively, instead of looking at the basket, where if you had one opportunity to get into at these discounted levels, would you be putting your money?
Well, I'd probably, if I'm looking at least a year plus, I'd probably look, assuming these are all high quality assets, and I think they are. I think Apple, Microsoft, Google, Amazon are all high quality assets, battle tested business models, management teams, balance sheets, a lot of growth ahead of them. Just a lot of option value in an industry that largely accrues to the largest platform. So I'd look to see which of those is the most dislocated stock, which stock is sold off the most. And in that, you'd probably put Amazon as the one that's sold off the most. It's the most macro exposed, by the way, because it's got the largest employee base. It's most exposed to all the inflationary cost pressures that we're seeing. So you're just waiting as an Amazon holder. You're going to wait for when things get less worse, when inflation pressures get less worse. That's the day that you're going to start seeing Amazon outperform, and probably the other big mega cap names too.